And good morning, everybody on the West Coast and in the Midwest, and good afternoon for those on the East Coast. My name is Michael Filighera. I am the proprietor, the owner of LogicalSignals.com, and I also have another website called TradersHelpingTraders.com. And I have been trading since 1979. I started as an options market maker. I have traded here in San Francisco, where I live and I'm located. And also I've traded on the London traded options market, the Amsterdam European Options Exchange, and on the German DTB before I came back here to the United States, finished trading options here on the Pacific. And then when everything slowed down and went electronic, I moved to a home office and started trading from home, where I realized that I no longer wanted to deal with volatility and options, and thought that the better way to do this would be to become a day trader. And that's what has been my focus primarily for the last 9 years, going on 10 years. And what I have learned and put together day trading has been nerve-wracking, but at the same time, not carrying an overnight position allows me to sleep pretty well at night. So today, my presentation on my 2022 watch list is really focusing on our mindsets. And with day trading in mind, but it could be swing trading, it could be, you could also apply it to position trading, that there are different things that I believe that one needs to do to prepare and have the correct mindset to go in and trade. And there are many factors that can break your mindset. So those that maybe have followed me or have listened to any of my updates, I talk about what I call the eye of the storm. And for anybody who really lives on the East Coast or lives in a hurricane area, the one that gets hit with really bad storms, that they realize that you could get the front end of that storm comes rolling through and everything collapses and the rain comes down and the wind blows, and then all of a sudden it stops and you look out and it's sunny. And that's because the eye of the storm happens to be passing over them, over that area. And then within that, there is calm. And then, of course, we have the back end of the storm that comes through and you get a repeat of what you just went through. But it's that eye of the storm where there is calm that I use as just a picture, an image of what, as a trader, we need to get ourselves into the eye of the storm where there is calm. And therefore, we're stepping into the chaos. We're stepping into a market that is going crazy, that's moving all around, or even not. But we're stepping into a chaotic atmosphere that is going to be filled with distractions. And here's the important thing that I have learned. Most often, those distractions are coming from within me, within ourselves. We tend to become distracted. And if that happens, then your focus is broken. So I want to put on my watch list. Number one, my watch list is going to be the NASDAQ 100 futures market and the S&P futures market. So I don't trade individual stocks. I still do position trading and I still do some core positions, but they still require the same amount of focus when you're determining what you're going to put on and how you're going to put it on and where things are going to be in terms of what you're doing. But today I'm going to put that focus on day trading. And anybody who's really been watching the markets the last couple of days, it's been like a wild, wild ride. And today is actually ending up being pretty much in line with the wild ride that we saw yesterday. That huge swing down, and then that immediate turn, and just do not look back, move up. And then that's followed by today, a move back down again. So we're getting both sides of this game plan going. So how do we deal with that? Well, I think that it starts with that each day I go through a process that I check in with myself. And so before I start trading in the morning, I attempt to go through what I call an SET score. So you're looking at your own sensations, emotions, and thoughts. So this is the primary area where I would start when I'm trying to help somebody develop a mindset, develop their mindset for trading. So the first thing that you want to look at is, what are your own sensations, emotions, and thoughts as you start to enter in to trading today? You're trying to determine, do I buy, do I sell? And so what I find is that many traders don't pay attention to that. And so all these emotions and thoughts and feelings are coming through before they ever enter their first trade. And for example, I'm just going to put a trade on, and what you need to get into is like, what does it do? You're now looking, okay, we've gone up. What should I do? Should I be a buyer? Should I be a seller? And you're thinking, well, we're a little bit overbought here. I'm going to give it a shot. I'm going to try and sell it. And so I'm going to see if we get in, and we don't. And now you're like, oh, dang, I knew I should have gotten in. And so you're going to try to catch this falling knife. And look what happens. You go in, you get in, and now the trade's now 150, 180. Oh, now you've got two. Now I'm down $500. What does that do to you? Okay, so now I just got butterflies in my stomach, and now I'm feeling a little anxious. Okay, I'm getting better. We're going to go down. Okay, are we going in? We're going in. And you're so happy, right? You're watching this. Now you're going to be so glad that it goes in, you get out of the trade. This time it worked. What I really was thinking is, like, if it continued to go down, your emotions and your thoughts at that time got you out too early. You kind of got in late, but that doesn't matter, because what I'm trying to reference is what happens to us when we don't pay attention to our emotions, thoughts, and our feelings. So I start each day and I score them. You've got a -5 to a +5. And the first thing that I look at is, you look at your sensations. What is your body feeling? You got aches and pains? You wake up with a headache. You got a little, my arthritis is kicking in, my stomach's a little upset, et cetera, et cetera. So you get to put a score on that. How much effect does that have? How much is that pain or the headache or the not feeling well drawing your focus away? Put a score. The second thing that you're going to look at is your emotions. Well, okay, I had a little bit of an argument with my spouse last night, and really, she's mad at me, blah, blah, blah. So your next is that, what is that emotion? Well, I'm a little bit angry, I'm a little hesitant, et cetera, et cetera. So now you get to score that. Then the third one is your thoughts. And often it's your thoughts of the market, right? Oh, I'm going to kill it today. I'm going to catch it today. I'm going to do this today. But maybe that thought is, but I'm hesitant. And well, I don't really trust it. I don't really, why are they taking it down? Why are they taking it up? So now you've got all these thoughts going. That's going to break your focus. So you score these -5 to +5. And then you get to combine them and divide by 3. And if your score is negative enough, you get to make a choice. Do you trade or do you not trade? Do you trade a live account or do you trade in a sim account? Those are important decisions that one needs to make. And let's say that you're kind of feeling a little bit off, but you're like, okay, I got this. I can do this. Now you're going to try to step into the market. And when your focus is able to, and you can't see what I'm doing, but I'm kind of drawing with my hands, putting a circle around myself. And that is, the barrier. Because what is going to be most important is to block out all of the noise. And noise can come in various forms. If we're seeing a market really begin to move around, And we're like, okay, what do I do here? Do I buy it? Do I sell it? Do I position myself? Am I putting on a put vertical? What do I need to do here? Now you're looking for that answer instead of paying attention to the price action, which is going to give you your answer. So you're allowing other things to come in, the who, what, where, when, and why of what's happening in the market, which by the time you figured out why it's happening or who's selling or why they're selling or what number came out, the trade is long gone. Now, what can that produce? Now it can produce a little bit of anxiousness because now it's like, well, you see, you should have gotten in. You should have done this. You could have done that. You would have done that. And those are the Uda sisters. They're your enemy. And you never invite them in because they're like a vampire. Once you invite them in, they don't leave. So getting a wraparound on what is needing to happen. For me personally, my internal demon or my derailment or my self-sabotage tool was anger. So for instance, let's just say I think the market, it's going to do it anyway, because what I really want to do is, I'm going to say, well, it's so active today, it's a little bit hard to demonstrate, but I'm going to say, I think it's a sell. And come on, I want you to go up now. Come on, market, do me the favor. You see that it's starting to go up. What starts to happen? And maybe I'll add to my trade. Now I got 2 contracts, and now it's going to go up twice as fast. And next thing you know, you might be down $500 or $1,000. Now you're getting anxious. Then anger steps in, because for me, it was my inability to really say I'm wrong. And when you take a look at where it's coming from, you get an opportunity to actually make a change. You get an opportunity to address that problem. And there are exercises that you can do to help your mindset. There are exercises that you can do to really take a comfortable look at yourself to see what's going on. Now, one thing that I highly, highly, highly recommend is that you can sit and play with this particular trade, because I'm still pretty confident that it should sail lower, and I'll make money on it. But what I need to also have in place is, where is your stop? What can I do to actually stop my confusion? I have to know, number one, why did I get into the trade? Well, it's breaking below the 50. That's a 50 moving average right there. It's breaking below that 50, so I'm expecting it to drop down, but I'm doing it against a rising lower band. These are Bollinger Bands, 1% Bollinger Bands. And the middle band is rising, and that's the 20. So what happens? It goes straight up to that 20. So what's my out? I'll let it go up to that 20, but if it breaks, it's at that time, it's going to break the 20 and then it'll break the 200, and then I have to be out. So you can stop your own pain, but let's just say I don't, and I decide I'm going to add up here. And well, no, it's not going to do it. And so you don't get out, but it keeps going. You're breaking your concentration. Now, the volatility is strong enough on days like today that it's applicable in both directions. There you go. Look at that's like, and see, if I didn't pay attention to my stop, and now this trade is really kicking my butt. Fortunately, I've made enough in this account today. So it's really turning everything around. So what do we do? Well, I'm going to add to it. All right, bring up my average and see if I can't make money on the trade. Again, the volatility today, had I gotten out on that break and it ran up, the next trade might be a short, but you can take your loss and get back in and likely make back the money you just gave. So there's several reasons to try to have a solid mindset. As you can see, that's exactly. And yes, because the account's big enough that I could hold it and still make money. But if you're working on a small account, Can you sit through a $1,300 to $1,500 loss comfortably and keep your focus and keep your mindset in line for what you got in the trade for? Now you can see, this is a 30-second chart. You can see that the factors of the trade have changed dramatically. That was pointing strongly higher, but now we're getting the move. And my tick on it was that it broke that 50. It shot back up, head fake, and then comes back down. So mindsets are very, very important. And you have to be able to hold them so that, number one, if you're really in that trade, you're going to let at least one contract, you're going to let it go. And how do we do that? Well, you have to have an idea. So I'm going to be looking over here at this chart. I'm going to be looking over where, okay, it really kind of got back up. This is the point of control. And that's on a 1-minute chart. So it's being able to review your charts. So I trade on a 30-second, a 1-minute, a 2-minute. So sorry, the 2-minute chart. But there's the point of control. There's the point of control on my 5-minute chart. When it comes up to it, it's going to be resistance because it's coming up from down below. I mean, if it's dropping down to it, it may come to that and it may waffle around for a while. Because what does the point of control represent? It represents that area of value where buyers and sellers will meet and transact. It doesn't mean that it's going to hold, but you can see how market goes up, hangs out, goes up, comes back to it, hangs out, goes up, comes back to it, hangs out, goes down, comes back to it, hangs out, etc. So it's playing all around the point of control. Now you can start to build your trading strategy, what you're going to do in this particular moment. Again, understanding that on a 2-minute chart, how often can that picture change? Every 2 minutes. How often can this picture change? Every 30 seconds, every minute, every 5 minutes. But if I keep my eye on them to where my moving averages are and to where my support and resistance levels are, then I have built a picture and now I can build my mindset around that. So let me go back to building a picture. This is my hourly chart. I make reference to my hourly chart and I mark all of my Elliott counts. So I make an update every day on the NASDAQ and on the S&P, and I update what happened on that day, and then I give a picture on an upside move and also a downside move. And if it's going to move up, what can we expect? If it's going to move down, what breaks, what gets broken, and that will give confirmation to the move, and what's going to create acceleration within that move. And often it is breaking moving averages. So let me try, come on, don't do that today. Computers sometimes just don't go fast enough to hold what I need them to hold. So I'm going to be looking, see, we're looking at our moving averages here. This one is the 200 moving average. This brownish orange is the 50. The blue is the 20, the yellow is the 8, and the blue, the light blue is the 4. So we use a 4, an 8, a 20, a 50, and a 200. All are important. The 20, the 50, and the 200 are most important. The 4 and the 8 are important for day trading. But these longer term or larger are vital for displaying weakness and possible trend changes. Okay, here we are. We went up, and I'll tell you what really kicked this thing into gear. When it came down and well, actually, when it went back up and it broke above the hourly 20, this is the 30-minute, but on the hourly it was the same deal. And once that happened, look what happened, the acceleration. Now, coming down, when it started to break it here, what happened? It accelerated. And then everything points down. So what puts a market or a chart in alignment with other charts? For a downside move, the 200 is on top. The 50 is below the 200. The 20 is below the 50. The 8 is below the 20, and the 4 is below the 8. That is signaling that we're still going to go down. So on the 30-minute chart, I still have a stronger downside picture. How do I want to now move that into this? The same basis. This chart has the same moving averages on it. And this changes quickly, by the way. But this is how I get my mindset in gear. This top one is actually VWAP. Then that's a 200. There's the 50. There's the 20. There's the 8. There's the 4. So we're breaking back above the 50. See how it starts to pick up some speed? Now, the next thing that any trader should tell itself, well, it's likely going to try to get to the point of control. It got close, but no cigar yet. Now, if it comes back down, you see it came back down. This is so small that it's very difficult to see. And I can't really blow it up anymore. Maybe I can move it out this way to see. But it came back down and it touched the 50. Didn't break it, it touched it. Again, 2-minute chart. Picture can change often. It could run up and then it comes back down like it did here. Broke that 50, boom, broke the 20, yeah, came a little bit, grabbed it back, ran back up, and then slid through. But it still gets the same thing. When they break, you're going to get a little bit of an extra push. So, and then you have, this is the value area low, the value area high. So everything in between is a value area. Now remember that when you're trading, and particularly when you're trading a futures market, the market will always move to value. And right now we're kind of moving sideways, but yesterday in the morning, the market moved to value to the downside. So what really was taking place is that once we started to break and we broke support and things started to fly, it was breaking below the moving averages because they had a lot to sell. And they needed to find the area where buyers will step in. Now, here's the other clue that we got that it was going to slide. It broke support. This is Fibonacci support, other major thing that I use. And so once that breaks, you can see this produces what I call a black hole. If I take it back to that hourly chart, you're going to see it's even bigger, right? What's to the left? Nothing. Where can I find support? I don't know. It's a black hole. What happens in a black hole? I got a lot to sell. I'm going to take it to the next support because that's what I have to do. That's where I should find value of where buyers will step in and buy what I have to sell. Same deal when you're going up. The buyers are looking for value where the sellers will meet them and trade. If we accept some basic premises of what a market does, that first one being it always trades to value. You'll hear others talk about that it always trades to the orders. These are common statements, but they're true. Now, here's two premises that I always tell people, you kind of have to accept these. You got to say yes to them and say, oh, I agree. And what that is telling us is that, number one, the market is always perfectly priced. That's a tough one to wrap yourself around when you're watching somebody go grab on either the upside or the downside. They're just looking and they're just wanting to get out or get in. The market is always perfectly priced. At that moment in time, that's the perfect price because that's what everything was telling us. That's what it should be doing. Our moving averages, our support levels, et cetera, et cetera. Now, the other thing that I believe that we all have to accept in order to really step in and not to get caught up in the hype is the market's always correct. It's always right. How can that be? Well, that's where buyers and sellers met and they agreed on the price, so it's correct. It's always correct. To think that it's wrong, it's like, boy, you're breaking your mindset, you're breaking your focus, you're breaking your concentration, and likely going to slip into anger. All right. Same thing about, if you're trading and you're with other people and you're listening and they're saying, oh my God, you're looking at Apple, look at Apple. It's going to be down $3. Have you seen Amazon today? Look at Amazon, it's down 100. Wow, have you checked out the volatility and the options? These are distractions. And one thing that I always trade and in my mind I accept, I don't care if it goes up or if it goes down. I have an idea of what to expect should it do either one. So I don't care. I prefer actually that it does both. I prefer that the volatility remains high. It provides so many trading opportunities. And it also helps you out, like I just said, if we're on that small term chart and we're going to trade and we're going to put in a trade, and you're wrong, and you've got your stop, it's so much better to take a $100 or $200 loss, particularly if you're trading a smaller account, because of that volatility. Say you thought it was not going to go down, and you bought it at 30, 39 because you expected it to go back up. First thing it does is goes down to 12. That's 20 some odd points. On a one lot, it's over $200. That's like, boom, that's within 30 seconds. That's how quick these moves are. But I can get out and go like, oh, okay, I took a $150 loss. Now I need to check, where's my next trade? Oh, I'm going to sell it. Boom, you just made your money back. If you allow a disruption into your focus, into your mindset, it's not going to result the way you want it to. So you've got to stop those disruptions. Remember what I said many times, it's coming from within ourselves. And once we can understand that, then you can start to address it. And there are different ways to do that. One thing that I really have found very, very useful, a good friend of mine that we were traders together on the Pacific Exchange. I went off to Europe. He left the floor and got another degree in neuropsychology. And within that study, he has now written a book about, and it's called Conversations with Money. And there's going to be a link that'll be in that will take you over and to give you an array of different instruments and tools that are going to help you to put your mind metrics, your mindset together and to keep it together. I just recommend checking it out. And I also recommend reading Conversations with Money. If you've had a problem that's just consistent, that you're not consistently profitable, that you keep getting disruptions within your cycle, that you go through a cycle where you make money, then boom, you get hit and one day you give it all back. A lot of it is these are just normal ebb and flow of a market. Not every trade is a winning trade. There are certain things that you're going to catch, every little catchphrase you can give yourself. But sometimes it's being courageous enough or strong enough to go in and take a look at what's happening internally to us. And again, I'm going to use myself as a reference. I would get myself into a position, and again, I would normally have an account large enough where I could handle it. But suddenly you're down 5,000, then you're down 7,500, and I'm adding to a position. And at the same time, I'm realizing, I'm saying out loud, you, whatever, you have no idea what you're doing. You're so wrong in this trade. What are you buying for? You should be selling. Boom. I just shifted from being calm and focused to being angry. And that angry was my self-sabotage tool. That's how I self-sabotaged myself. Now I'm going to because why? Because I hate being wrong. Oh my God, what a silly thing to have when you're a trader in the market. And on top of it, you're a day trader. You're going to be wrong more often and if you're going to get angry about it, you're not going to be able to trade. Here's another self-sabotaging thing. You've got your plan. So you've got a trade plan. You know where your stops are going to be. You know how much you want to make. You know where you think the market's going to go based on your analysis, your quick analysis of the market, where the moving averages are, et cetera, et cetera. I'm going to try to get in here. I know if it goes up and breaks there, I get out. Okay, so am I willing to risk $5? Yes, I'm willing to risk $5. So I would try to see if I can get in. Well, it did, but now you see you got the move. Well, what's my move? My move is to that lower band. So let's just say you got in at 41.10 and that lower band is at 94, 95. That's a hot trade. That's a great trade. That's $15. That's a big trade. And then you move on. Now, if there's something that comes in and breaks that focus, now you're like, oh, the hesitation, the fear and hesitation that'll come in. You worked it out, but now it's up there and you can put that order in and you hesitate. Well, am I right? Well, what happens if I'm not right? Well, what happens if this is the hesitation, the doubting? And then once you do get in, what happens? Then fear comes over to have a little talk because you get in and it pops up. Oh crap, oh crap, oh crap. So I've seen people where they just immediately get out for $100 loss. But in the meantime, you had decided where your exit was up here. Let's just call it 22. If it breaks above 22, then it's going to go back above 42. So that was your stop, but it goes up and it gets up to here and you're like, oh, no. And you get out and what does the market do? Turn around and drop. These are self-sabotage tools, but they do not have to be in control. You can work your way around it. And sometimes what's involved is turning around and having a conversation with the person or with that part of you that's doubting, with that part of you that gets angry, with that part of you that is fearful. Sometimes you need to go figure out why. Why am I fearful? Well, because I have a small account and I really can't take a big hit. Okay, maybe you should be trading the micro account and not the mini. Don't play it for $5 a tick, play it for 50 cents a tick. Much more comfortable, much more user-friendly. So there are things of ways you can answer that, and then suddenly that comfort level comes back. You've worked through it. Now you've got some thoughts and you've got a process that when these things come in and start knocking on your door, you have an answer. And say you give that doubt, you give it a name, you call it doubt. And then doubt comes walking in, you're like, thank you very much, doubt, I got this. Now, I will be honest and say it's not always that easy, but it's a starting point. It's a point where we begin to really look at things and just kind of determine what it is we need to do. So again, I want to just emphasize mindset. How do I develop that mindset? How do I maintain that mindset? How do I block out that noise? Number one, you don't look. I mean, I could sit here, if I'm trading off of this screen, I got all this going. I could be looking like, oh my God, look at Amazon, it's down 107. Oh no, it's only 105. Are they coming in to buy it? Oh, I don't know. Who cares? It's going to be reflected in your price action. Everything that happens with these big stocks is going to be reflected right there. So what's more important, to watch this or to watch my watch list? Because that's really what they call this. This is your watch list. So do I need to watch that to determine if I'm going to trade? By the time you get your signal there and translate it over here and get your order in, it's done. It's already moved on. So again, when you have your trade plan, now you want to execute your trade plan. You have to take an honest look each morning. What are my sensations? What are my emotions? And what are my thoughts? What's going on right now before I enter the trading day? What's going on? And there are times when you're going to have to review them. Maybe you went through a little thing where anger or doubt or fear came in, derailed you. You didn't have a good trade. You got to take a stop. You take a step back because you still know you got to get back into that mindset. So you take a review. What are my sensations, my emotions, and my thoughts? What are they right now? Are they different from what they were before, or are they now just amplified in my head? And you get to then make another decision. And sometimes in the learning process, the best decision you can make is not to trade, or to switch instruments, or to figure out what I can trade. The NASDAQ, it's wild. And right now it is wild, crazy. And all you're going to do is watch this, how quickly this will drop and rise, and what the spread widens to. It was just 82 at 80 at 84. Now it's 89 at 90. Oh, now it's 88. Oh, 87. Oh, what is it? And it's 93. You see? And you're looking here, notice like, oh my God, look at that move. My strategy told me, okay, this is the lower middle Bollinger Band, came down, touched it, and bounced. What was your entry? Okay, so not paying attention to that. Your entry was right there when it came in at past 81.75. Say you got long at 82. It went to 97. So you at least could get $10 out of it. Again, I'm working on a 30-second chart. You're going to have a much different picture if you're working on a 5-minute chart. Okay, on your 5-minute chart, if you got in at 84, you sat through that little bump, slide back down, because it's still moving in your direction. And you're looking for it to come up to maybe the 5-minute 20, which is at 41.02. And guess what? It did. Also, when you're able to stay calm and you're working a strategy, there are a lot of times that you might be thinking, okay, it's going to come up and it's going to touch or go through the 20. But instead, it gets up close because my 20 comes in at 101.75. Somebody else's 20 maybe come in at 4,125. Their calculation might be just a little bit different. Their trading system might just have a little bit different algorithm that produces that same moving average. And so being able to work within your own parameters. If you're not able to really follow and focus on the price action, you're losing out on a lot of hints that the market is going to give you about, will it get to my target or is it going to get close to my target? Do I add a contract here or do I not? The market will give you the clues if you are paying attention to your own signals. I use the moving averages very, very consistently. And again, I'm going to go back to my longer term chart so that you can see it. I use them very consistently. I'm constantly checking them. I'm constantly going down and up. I go look at the daily chart because I want to see what is it doing. This daily chart has been negative, even against yesterday's wild ride back up. It did not change the daily moving averages. So the fact that they continued to point hard down gave me a clue as to what it really was on an Elliott basis, was a fourth wave correction, right? There's wave 3, there's wave 4, wave 5 should bring it down to here. Now that's a pure technical view. I could probably listen to people say, no way that market goes that far. No way. It's like, why? Why can't it? Because I'm bullish. Okay, I understand now. It's just like if I were to say that the market go up to 14,857, 858 before it turns and goes lower. Why? Because there's an Elliott guideline that tells me that this fourth wave had potential to get up to the terminus of the fourth wave of a one lesser degree. And that's right there. It had the potential. Doesn't mean it has to. So what gave me the clue? Okay, moving averages, you're all heading lower. I walk in this morning. Actually, I checked overnight so I could see that they were already taking it lower. And I'm like, oh, okay. So maybe this was the floor, came in, put the label on, and now I'm looking. So I can play the up and down side, but my overall opinion on a day basis, on an hourly basis, are for continued downside. But that does not mean that you can't step in and play these small little moves using the exact same mindset. I have a larger picture. What happens on that larger picture? I should start to see acceleration. Where should that acceleration happen? To the downside. So I'm looking for it more to the downside, at least if I'm going to move this chart and maybe go out to the 15-minute chart. All right, which gives me more. This is all volume. So you can see that the point of control is that where most of the volume has been occurring today during our session. This is where it occurred overnight. This is where it's occurring today during our session. And that's why the point of control sits there. If this continues to move and the volume picks up, now we're heading lower now, which is great. Then the point of control will move down. Now, but what we're heading for, okay, we broke and now we're breaking nicely below on a 15-minute chart, the point of control. What's up next? The lower, the value area low. And if it goes through that enough, the value area will switch, it'll move down. Right now, it remains 14,041, 42 on the bottom and 14,240 on the top. That's a 200-point trading range. Awesome. I'm happy. Let's have enough volatility. We want to go to both places. Look what happened. It did. First, we came down to the bottom. Then what do? We ran back up to the top. Now we're working our way back down to the bottom. And we've already broken it twice, but it holds and they push it back up. The buyers will step back in. And they could do it again. They definitely could do it again. So how you translate all of your analysis and your work to support your mindset is very important. But if you're kind of coming in without any particular idea of what you can expect from today, and you're kind of listening to maybe CNBC and certain people on CNBC who suddenly tell you, you need to buy Peloton, Roku, Tesla, blah, blah, blah. All good and done, you know, it's okay. If they do that, if the market listens to that person and they do it, it will be reflected in the price of this index, and I will be able to trade it. Do I need to hear that before I come in? No, I really don't. Do I need to hear what some other pundit is going to tell me about why Kathy Woods is on the slide? No, Kathy Woods is Kathy Woods, and what she does is she does. I'm not responsible for it. But certain people take glee in the fact that she's losing tons of money. Why? Why bother? Why would you want to get angry because somebody else, get angry, they're losing money? Did you invest in the ARK funds? If you didn't, then that's not your problem, it's hers. But it's taking you away from your mindset, from your focus on trading. So my goal for 2022 is to really just bring into focus the mindset. It's not impossible. It doesn't happen overnight. It's a consistent working project to make yourself a better trader. Now, if you don't have that problem and you're able to step in and you're just like clicking, then your mindset's already perfect. Your mindset is really working for you as it is. And you can handle taking in all of this extraneous noise, perfect, no problem. But there are a lot of people who are not like that, that do get distracted, that are still learning this process. They hear about all this money being made day trading. They hear about all this money being made trading GameStop options, or trading Tesla options, or Apple options, as the quote unquote whales. And they get hooked into that, and then they lose money. And then now they're discouraged. The thing to understand is, like, well, those whales that are coming in and pushing the price of a stock because they're buying options, and they may be call options, they have put a complete trade on before they're done. Before you're like running and going like, oh, they're going to push the market up because they just bought 1,000 Tesla 950 calls. Stock's trading at 910. Oh, Musk is going to go up. Trust me, if they're paying a premium for the 950 calls because they've sold it via something else, either a put or something else, it's a done deal. It's a done trade. And usually what will happen, if you pay close attention, right, you can go in and you can look at every day, you can see where the options are trading. Now let's just use Tesla. Their earnings are coming up. Oop, it's not a future. Let's take a look at Tesla. These have 3 days of life left. 10,000 of the 920s. Now those are the at the monies, and they were in the money, but they basically were the at the monies. Now it's the 910s. So the 920s, look at that premium. Look at the volatility. Holy smokes. 135. Wow. And then you take it out to February, it's 109, then it's 100. And that's just going out 2 weeks. That's fabulous volatility. What do you want to do? I want to sell that premium. And look how big it is. But if someone's buying it, it's because they likely already have sold. Maybe they sold the stock at 930. Now they're coming in. Okay, I'll buy those calls. Done deal. If the calls get exercised, or you actually whatever, it's a done deal. They bought, they sold. Thank you. They're done. They made their money. So check it out. 3 days to live, 10,000. You'd expect that open interest would increase by at least that amount. Come in and look at it tomorrow. When you're done looking at it, realize that that's how much options got rolled or expired. It's not expired because they got exercised. All right, same thing on the puts. That's what I'm talking about. So to be led by that is not a good idea. Oops, see if that didn't work. So anything that's going to break your mindset from doing any type of a trade. If you want to follow along with the whales, great. Have your trade plan in place. Know what you're going to do, know how you're going to do it. Because if you're going to, if you say you're going to do it in the NASDAQ, you're going to play this against the NASDAQ. Okay, you can. It's got a high weighting in the NASDAQ. It has a high weighting in the S&P as well. So this rally that we got a little while ago was primarily due because they took Tesla from being down to being up. That one right there. Ran it up to that resistance at 14,250. Hit it on, almost hit it on the nose. And now what happens? Okay, that's done. Boom. Now Tesla is down 21. Do you care? Should you care? Well, if you're long the calls naked, yes, you should care. But otherwise, it's like, why? I don't care what's going up and what's going down. I'll have the conversation after, because I love the educational conversation, or just talk market. We all like to do that. But if it is going to interfere with what you're doing or what you're attempting to do, you don't need to hear it. You need to stay focused. And we're staying focused I've got my long-term, and believe me, an hour is long-term as a day trader. Is very long-term, because I can't put on, I mean, unless you're a swing trader and you're really maybe going to carry it for the day, trading off of the hourly chart is a recipe for disaster. I get my bigger picture from that chart. I get maybe what I think the day should be like off that chart. I also receive what happens if they run it and it breaks a certain point. Well, I now know that what can happen. And when I start to see it start, I'll take a reference to the hourly chart and maybe come in and buy it. That's a trade that I might want to hold. You know, yesterday when they started to break higher, it was a trade where you bought your one lot, and maybe it was a micro. But when you're getting 100 to 200 to 300 swing, a micro is going to make you a ton of cash. So there are different ways to play it, to different things that are happening. But if your focus isn't there, you're going to miss it. So mindset, being prepared each day by having your mindset put together, by having that mindset in the right direction, it keeps you open for all things. Again, I'm a day trader. I'm just looking to capture these moves and how they happen, and not why, just what is it breaking, right? See, I can look and I can tell you they just came in and they bought a big basket of stocks, right? In the NASDAQ. And how is it being resolved? They just sold some. But that's how fast the volatility is taking things today. They just ran it $15, and then now they're dropping it $20. All in 30 seconds. That's how fast it's going. So as a day trader, or just as a trader, keeping your focus is vital, and it's very, very important. So what I am attempting also to do this year is I do have a trade room. And if I had enough interest, I would keep the trade room going. But it's very difficult to attempt to teach and trade, because to teach, I'm taking my focus away so that I can share it with others. So my recommendation to you, if you have a solid interest in, and I'm going to put this myself in this little chat box. I want to put this into everybody. If you have an interest in learning about mindsets and how that can work for you, send me an email. And that's my email address. And I always answer. So I'm setting up coaching. And I know what I have on my website as far as my coaching prices. I am more than willing to focus on the needs of the individual. Again, you're going to hear other people say, well, I don't make money on that. I'm not looking to make a fortune on coaching. I am always willing. I always will charge for coaching for one main reason. I think when somebody has to put money in, they're going to expect a return on that money, as they should. And the return on that money is improving their mindset, getting them lined up to walk into a market and day trade or swing trade or option trade and make consistent profits. And learning how to deal when it doesn't work, learning what to do when certain things happen. How do we control risk? What is good risk management? When should I add a contract to a trade? When do I need to get out of the trade? So learning all of this helps your mindset stay where it needs to be. And that's focused on what you're doing. It's not impossible. I'm going to wrap it up right there, folks. If anybody has a question, now would be the time to ask. Otherwise, I got to turn it back over to David so we can get ready for the next presenter. So I thank you for your attention today. I know I gave out a lot of talk in there without much, and I try to do it in a live environment because I want people to see. I don't particularly use, like slides and different things. I use live markets because we don't trade a slide. We trade live markets. And so that's what my big thing is, seeing it in action, seeing what happens when I can demonstrate what happens when certain things get broken in either direction. When I can get to a point and show, well, this is what'll happen. That broke that level, I'm looking for this level. And you can see we're still heading down to 13,981. That's the goal. That's what I'm looking for right now. And if it breaks it, I got my next one. Because why? Well, that's the value area. Support, that's where value can be found. And if it doesn't hold, small value, then this is a black hole again. Well, that was the other thing I was going to show you, and then I'm going to turn it over to David. You have to go out to the weekly chart. Again, here we are. See where I am? I have to go out to the weekly chart. And now, look how far back I am to find support. Right there, right there. Oh, actually, I'm right here. I'm back into June to find price support. I'm back into May and June to find the price support. Will it hold? I don't know. In theory, it's supposed to, but it may only just be for a brief moment, right? Yesterday it held, but I had to go back to June to find it. All right, that's it for me. Thank you very much for your attention. I'm going to wish everybody a really great balance of trading day and a trading week. And David, thank you very much. I'm turning